The consumer staples sector is wildly popular among dividend growth investors. And this is for good reason. Many of the best dividend growth stocks in the stock market are found in the consumer staples sector. In fact, consumer staples has the highest weighting in the Dividend Aristocrats Index, a group of elite dividend stocks with more than 25 years of consecutive dividend increases. In today's video, I'm going to introduce to you the 7 best consumer staples stocks available today. The first consumer staples stock that we'll discuss is J.M. Smucker. J.M. Smucker is a diversified food company. The company owns well-known brands like Smuckers, Folgers, Pillsbury, and Bicks. J.M. Smucker also owns a number of pet food brands. J.M. Smucker's stock price has been hammered as the markets have negatively reacted to the company's declining sales growth. In fact, J.M. Smucker expects to generate no sales growth in fiscal 2018. However, the company does expect to generate 6% to 8% earnings per share growth, driven by cost cuts and share repurchases. Over the long run, we believe that J.M. Smucker's growth trajectory is intact, driven by its promising portfolio of pet food brands. The second consumer staple stock that we'll discuss is Church & Dwight. Church & Dwight manufactures personal care and household products. Its main 2 brands are Arm Hammer and Trojan condoms. Church & Dwight's strong brand portfolio is a result of a disciplined and successful string of acquisitions. In fact, 10 of the company's top 11 brands have been acquired rather than developed in-house. Looking ahead, Church & Dwight's 2 major growth drivers are international sales and e-commerce. International sales grew 8% last year, while e-commerce sales have grown by 500% as a percentage of total sales over the last 2 years. Investors should note that Church & Dwight has a very low dividend yield. With that said, Church & Dwight has increased its dividends for 22 consecutive years, and we expect many more years of consecutive dividend increases from this blue chip stock. The third consumer staple stock that we'll discuss is Vector Group. Vector Group is a unique company. It essentially combines 2 unrelated businesses under the umbrella of a holding company. More specifically, Vector Group is comprised of 2 separate businesses that operate in the tobacco and real estate sectors. Tobacco comprises about 60% of Vector's total sales, while real estate comprises the remaining 40%. The most interesting part about Vector Group's investment thesis is its cash return to shareholders. Not only does the company have a very high dividend yield, which sits at about 8.4% right now, but Vector Group has paid uninterrupted dividends since 1995. Moreover, the company has paid a 5% cash dividend each year during this time period. Because of this, we believe that dividend payments will be the majority of Vector Group's total returns moving forward. With that said, the company is still very attractive for income-oriented investors. The next consumer staple stock that we'll discuss is Mondelez International. Mondelez was created when Kraft spun off its international business from its food business. The food business merged with Heinz to form Kraft Heinz, while the international business remains operating independently as Mondelez International. Today, Mondelez generates total sales of about $26 billion, with 3/4 of that coming from international channels. Mondelez sells its products in 165 countries, with its major brands being Ritz, Belvita, Triscuit, and Cadbury. From an investment perspective, Mondelez's low dividend yield may discourage income-oriented investors. With that said, we believe that the company's continued international expansion, combined with its modest payout ratio, leaves plenty of room for continued dividend growth moving forward. The next consumer staple stock that we'll talk about is Kellogg. Kellogg is one of the world's most legendary dividend growth stocks. It has paid more than 370 consecutive dividend payments, going back as far as 1925. Lately, though, Kellogg has struggled to respond to changing consumer preferences. Its main business line is cereal, whose sales have been declining steadily in recent times. To address this problem, Kellogg has been expanding into new product verticals. This includes several acquisitions, including the $2.7 billion purchase of Pringles back in 2012. Outside of cereal, Kellogg also owns Cheez-It and Keebler. If Kellogg's brand repositioning proves successful, we believe that investors who purchased at today's cheap valuation will be handsomely rewarded moving forward. The next consumer staple stock that we'll discuss is Altria. Altria is the largest cigarette company in the United States. It's responsible for the Marlboro brand of cigarettes, as well as several non-smokable brands like Skoal, Copenhagen, and the Saint Michel brand of wine. There is no doubt among the investment community about the growth prospects of the cigarette industry as a whole. They are very poor. With that said, we believe that Altria's growth will be driven by its non-combustible portfolio, which is led by the IQOS technology that is currently being reviewed by the Food and Drug Administration. Separately, Altria's valuation has become very compelling as investors have sold off the stock in response to these poor growth prospects. Indeed, the company is trading at a noticeable discount to its long-term average valuation multiple. Because of this, we believe that valuation expansion will be a meaningful contributor to its total returns moving forward. The next consumer staple stock that we'll discuss is Walgreens Boots Alliance. Walgreens Boots Alliance is the largest retail pharmacy in both the United States and Europe. The company operates more than 13,000 stores in more than 11 countries. Walgreens stock has come under pressure for two main reasons. The first is a continued price war among the major drug companies, which has pressured Walgreens' margins. Separately, Amazon has announced an entry into the pharmaceutical space through its acquisition of PillPack. Both of these issues have led to Walgreens trading at a noticeable discount to its normal valuation multiple. Because of this, Walgreens has some of the highest expected total returns in our investment universe. Thank you for watching today's video, which introduced to you the 7 best consumer staple stocks available today. We invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education videos. If you're interested in learning more about our quantitative approach to dividend growth investing, I invite you to check out our website at www.suredividend.com. I'll see you there.